Hi guys, a very good morning to everyone. Welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. Well, the global cues are looking fairly positive. GIFT Nifty hinting at another day of positive start. So looks like we are poised for a fourth straight day of gains, and the Nifty is likely to make a dash at that 50 DMA level of 22,300 or thereabouts. Of course, lots of stocks in focus, including the likes of Cipla, which has seen a large block deal. You also have Airtel numbers that we'll be reacting to, some changes on the MSCI India index, and of course, lots of other stocks in focus. And we'll also be getting all your stock-related queries answered by our technical experts on the show. So over the next 30-35 minutes, a lot of stuff lined up, on the show. So send in your queries as well. We'll try and take them up with our technical experts. But before we move any further, let's take a look at the top headlines of this hour. Stocks rally on Wall Street with the Nasdaq notching a fresh closing high. Now this despite producer price inflation for the month of April came in higher than estimates. The CPI inflation report is due later today. Meanwhile, Fed Chair Jerome Powell says that inflation still remains sticky and rates are likely to remain steady at current levels. Asian markets trade higher, tracking gains on Wall Street. Markets in Hong Kong and South Korea remain shut for trade, while the GIFT Nifty is suggesting at a higher start for the Indian market. Crude prices correct. Brent falls below $83 a barrel on a hotter than expected PPI inflation report in the United States. Gold prices, however, rise to hold above that $2,350 an ounce mark. Among stocks to watch out for today, Airtel's India business meets estimates in the fourth quarter, but consolidated numbers are a miss due to weakness in the Africa business. Meanwhile, there's been a large block deal in Cipla, 2.5% stake exchanges hands via 3 block deals. Well, sources say that the promoter group may have trimmed stake in the company. Well, just about 10 minutes to go for the market, open. Of course, let's take a look at what the cues are looking like this morning. Of course, Nifty spot shut shop at 22,200 or thereabouts, up 113 points. So it was a triple-digit gain. Mind you, it was the third day of gains on the Lal Street. India VIX, which has doubled over the last 13 sessions, managed to cool off a bit, just about 2% lower, but it has held up above that 20 levels on the India VIX index. So if you look at the FNO cues coming in this morning, Nifty open interest was down 7.5%, shed somewhere around 8.9 lakh shares. The Nifty May futures trading at a premium of 90 points versus 97 point premium in the previous session. The Nifty Bank open interest was up 2.6%, added 59,900 shares. And if you look at the put call ratio, that's jumped to 1.02 vis-a-vis 0.96 in the previous session. New entrant in the FNO ban list is Birlasoft and still in ban, Balrampur Chini, Canara Bank, JMR Infra, in Hindustan Copper, Vodafone Idea, SAIL, Piramal Enterprises as well as Z. PNB, however, has managed to come out of the FNO ban. Looking at the fund flows picture, of course, FIIs remain net sellers. They've sold in excess of 4,000 crore rupees worth of shares in the cash market. Buying support from domestic investors is also there. So 3,500 crore worth of stocks bought in the cash market by domestic investors. Do we have a technical expert joining in now? Okay, Rajesh is ready. So Rajesh Palviya of Axis Securities joining in this morning. Great to have you on the show, Rajesh. Fourth straight day of gains. We are finding stability above that 22,000 mark, but do you think we would make a dash or at that 22,300 mark, which by the way happens to be the 50 DMA on the index?
Good morning, Nandita. Yeah, definitely looking at the recovery from the recent low, we have almost slipped below 200-day moving average, and now again, trading above those levels. The kind of recovery which we have witnessed from the 21,800 level and the broader market also started, recovering from recent low. We believe that this rally can extend further, and yes, 22,350, 22,400 could be the next level where this rally can extend further. So I think one should remain on the long side of trade. Your stop loss should be now placed at around 22,100 as the most of the put writers are now writing put around 22,100, 22,000 strikes. So that clearly shows that again on the street confidence is coming back, and looking at the call concentration, once we able to take out about 22,250, then there could be a short covering rally towards 22,350. to play this up move, one can look to buy 22,200 call option, which was closed at around 112 rupees. I think these call option can rally, and 160 to 170 could be the possible target for this call option. So one can buy this call option with stop loss of 85 rupees. Even on the Bank Nifty also, the kind of recovery which we have seen from its 100-day moving average, that clearly shows that now if it's able to take out above 48,000 level, then there could be a good short covering action we can witness in the market, and possible rally can extend to 48,600 level also. So at this moment on the Bank Nifty also, one should remain on the long side of trade till Bank Nifty is holding above 47,500 600 zone. So these needs to watch closely on the downside. If it's hold, then yes, there could be a chance that we may take out above 48,000 level, and then short covering action can be there. So on the both indices, we are holding at this juncture a bullish view, and one should remain on the long side.
All right, one should remain on the long side, but let's talk about the stock in focus right now. Cipla, there's been a large trade in this counter, 2.5% stake exchanged hands via 3 block deals. Of course, sources are suggesting that promoter entity may have trimmed stake, but yesterday it was among the top Nifty losers, and day before, of course, reacting to management comments, we had seen a good 5% bump up. Today, how is it looking on the charts? Do you think it could, once again resume its upward move?
I think Cipla, if you analyze on the longer term time frame, stock still holding the ground. Though there is some corrective move is taking place since last couple of weeks, but still, if we analyze on the longer term, stock is holding above its important support area of 1300, 1320. That's is an important level to watch for. If it's not breaks below those levels, then yes, one should remain on the long side of trade. On the higher side, 1400 to 1440 are the supply zone for the stock. That is almost coincide with its 50-day moving average. So if it's able to take out above 1440, trend may resume on the longer side for long-term perspective also. So I think those who are already bought the stock in recent correction, they can hold on the stock with stop loss of 1340. Upside target, immediate target is 1400, then 1440.
All right, those are the levels to watch out for on a Cipla. But Oberoi Realty, that's another one that came out with numbers. Profit has jumped 64%. In fact, margins have also seen a good bump up, 60% vis-a-vis 38% on a YOY basis. So overall, a very good set of numbers coming in from Oberoi Realty. Share has been in a steady uptrend, right? Last 6 months, 20% kind of up move. Over the last 1 month as well, we've seen a good decent 8% kind of an up move, and recent past as well we've seen the stock on an upward trajectory. Any levels on the upside that you'll be watching out for here?
So Nandita, almost stock is negotiating with its multiple supply zone on the daily chart, which is placed at around 1450. The way stock has consolidated around 20-day, 50-day moving average. So we believe that once stock manages to sustain above 1550, 1560 zone, then this really can extend further, and possible really can extend to the level of 1600 to 1630 kind of level. So I think one should remain on the long side of trade, as overall structure for the stock is on the bullish side in this volatile market. Also, stock was consolidating in very narrow range, and looking at the gap up opening, we believe that stock managed to give breakout of this consolidation, and then a follow-up buying action may lead to the 1600 to 1640 kind of level. So at this moment, buy can be hold with stop loss of 1540.
That's a stop loss on Oberoi Realty. Before I come to your stock recommendations, what about Colgate? It has reported an okay set of numbers. Profit has grown 20%, but margins have come in at all-time high. Looking at the stock, it's not very far from its 52-week highs, but in the last 6 months or so, it has rallied somewhere around 30% or thereabouts. Would you expect a dash at that 52-week high levels in the next couple of weeks?
Definitely, stock is continuously forming higher top, higher bottom formation. Stock is moving in up-sloping channel on the weekly chart. This is the only stock I think is holding the ground near to its all-time high trajectory. the way stock has moved up in last couple of months, we believe that yes, there is a high possibility that Colgate can again register its all-time high, and possible really can extend to 2900 to 2950 also. So I think buy on dip should be your strategy for Colgate, and on the downside 2760 is the key important support area for near-term trend. So that can be keep as a stop loss to hold the long position.
All right, that's the view on a Colgate. V-Mart Retail reported numbers yesterday. Net loss has widened a bit if you compare it with the same quarter last year. Revenues have grown in double digits, 12%, and EBITDA has jumped 75% or thereabouts. Margins have almost doubled at 6%. Now, the stock has seen very good traction if you look at the weekly charts as well as the monthly charts. Here, would you play for a higher level?
So Nandita, if you look at the daily structure of stock is forming, inverse head and shoulder kind of formation. Stock is almost now negotiating with its neckline, which is placed at around 2200, 2230 kind of zone. Once stock manages to view breakout about 2230, then possible really can extend to 2500 level also. So I think there is a high possibility the way stock has recovered in last couple of trading sessions, the stock is consolidating in narrow price range. So I think there is a high possibility that stock may attempt to give breakout about 20 to 30, and if that happens, then really can extend to 2450, 2500 also. So at this moment, yes, one can buy and accumulate the stock. Your stop loss should be placed at around 2130.
All right, stop loss at 2130. That's the call on a V-Mart. But let's take a look at how the markets have opened up this Wednesday morning. Of course, a steady uptick, almost 40-point up move on the Nifty. 22,250 is where we are at. It's a fourth straight day of gains. Ever since we hit that low of 21,800, we have managed to stage a very good recovery. And, that's evident as Sensex is also up somewhere around 100 points or thereabouts. The mid and small cap indices are also fairly upbeat. Yesterday, broader markets were outperforming. Remember, the Nifty small cap index was up 2% yesterday. Today as well, a 0.5% uptick on the Nifty Midcap index, and BSE Small Cap Index is also showing signs of strength. So we are moving from strength to strength when it comes to the market over the last 4 sessions, and advance decline ratio yesterday was also pretty healthy, 4:1, and today, right now at least, it's almost 6:1. So it's broad-based gains coming in, and if you look at the sectoral performance, the Nifty Bank Index has staged a good comeback yesterday from the day's low, and today as well, building on those gains. Of course, we'll be watching out for levels of 48,000 on the Nifty Bank Index, as was being pointed out by Rajesh Palviya as well. Let's see whether we manage to build on those gains and hit that 48,000 mark on the Nifty Bank Index today or not. Let's take a look at some of the other sectoral movers. PSU Bank Index, very strong up move in excess of 1%. Let's see what metals are doing, because yesterday metals were shining bright. That index was up 3% yesterday, another 0.5% uptick coming in there, and autos as a pocket were also performing well after some bit of weakness in the previous session. So autos flat, not much movement there, but let's see how the day progresses. Aside of that, let's also take a look at the realty pack, because overall realty has come out with a very good set of numbers. Realty pack, yes, 0.5% up move coming in there as well. So all in all, a good start. Let's see whether or not we manage to build on that, and on the index, if we can reclaim that 22,300 mark. But FMCG is another pocket I want to see, because yesterday it was under a fair bit of pressure. Let's see whether it has managed to make a comeback. Flat, but still trading with a positive bias. On the index, in terms of individual movers, after the block deal, Cipla is up nearly 5%. Yesterday, remember, it was among the top Nifty losers. Today, good recovery, 5% up move. Bharti Airtel, strength in India business, and seems to be focusing more on that and not on the weakness in the Africa business. So 2% uptick on shares of Bharti Airtel. Hindalco, Novelis of course has filed papers for IPO, so Hindalco extending gains, 1.5% gains coming in there. BPCL up 1%. Coal India, NTPC, Tata Steel, UPL as well, by the way, has managed to stage a recovery. Yesterday, it was the top Nifty loser. On the flip side, HDFC Bank, that's the top Nifty loser right now, almost a % cut. Aisha Motors, HDFC Life, Asian Paints, M&M, by the way, reports numbers later this week. Ahead of that, some bit of weakness, and losers are few and far between, a handful of them, and HDFC Bank happens to be the top loser on the index. So all in all, a good start, and we are holding out above that 22,250 mark. Looking at the open, any recommendations, Rajesh, for our viewers for the next couple of sessions?
I think Vedanta one can look to buy. The way stock is holding the ground and the stock is shown a good long built up setup series on series also. So we are holding bullish view for Vedanta, and we believe that this stock can continue furthermore upside. 445, 450 could be the possible target. So Vedanta is buy with stop loss of 425. Another stock that we like from the automobile space, that is Ashok Leyland. Stock is now almost trading near to its all-time high trajectory. The way stock is holding the ground above 200 level, long built up was there in previous day also. We believe that Ashok Leyland can exhibit good amount of rally towards 212 to 214. So Ashok Leyland is buy with stop loss of 199. Third stock that we like is IRCTC. The way stock has recovered from its recent swing low, and now stock is holding about to 50-day moving average. There is a strong bullish candle in the previous day. Now we believe that even the railway theme was showing good traction in the previous day also. We believe that IRCTC can extend its gain. 1045, 1050 could be the possible target. So IRCTC is buy with stop loss of 1010. And another stock that we like at this moment is Indigo Interglobe Aviation. Stock is now almost trading to all-time high trajectory. The way stock is holding above 41,000, 4140 kind of level. In the volatile market also, stock was showing good stability. We believe that this rally can extend to 4250, 4300 for Indigo. So Indigo is also buy with stop loss of 4100.
Right, all those stocks, of course, our viewers should keep on their radar. But Thermax, this is one stock that is up somewhere around 12%. I think it hit a fresh 52-week high. There was a Jefferies report wherein they say they see a 16% upside on the stock from current levels. Your thoughts? What are the levels you'll be watching out for, in terms of upside? And do you think it's a breakout stock now?
A very strong gap up opening, and the way stock has managed to give breakout of its contracting triangle on the daily chart. Overall structure is bullish. Stock is continuously making higher high, higher low formation. So that clearly shows that there is a sustained buying action is taking place. There is a flag formation breakout is already done on the weekly chart. Yes, I think those who have already bought the stock can hold on the position. 5160 should be your trailing stop loss to hold the position. The way stock is showing the buying interest, I think if it's able to hold out 5160 on a closing basis, then this really can extend further also towards 5400 mark also. So though stock is volatile after the opening, I think 5160 needs to watch closely in today's session. If it's able to sustain, I think one should remain on the long side of trade.
Remain on the long side. That's the view on a Thermax. But what about Berger Paints? The stock has been excluded from the MSCI India index. Reacting to that, 2% lower as of now, but the stock has been stuck in a downtrend, right? Any strategy here? Should one buy on dips, or if somebody is holding it, should they book part losses? How would you approach?
I think one should avoid Berger Paints at this moment. Stock is in a weaker zone. Stock is making lower top, lower bottom formation. Stock is moving in falling channel on a daily chart. That clearly shows that there is a sustained supply pressure in the stock. So I think one should avoid at this juncture for Berger Paints. There could be furthermore, down move we can see in the stock if it remains below the 495, 500 zone. So until the stock not crosses above 500, I think we will be on a avoid mode for the Berger Paints.
All right, avoid Berger Paints. On that note, let's take up some viewer queries that are trickling in this morning. Raj Nihalini wants to know your thoughts on a Clean Science. The stock is up over almost 1.5% today, and hasn't done much over the last 5 sessions. Do you spot an entry point here?
Clean Science is still at the lower end of this correction. Looking at the structure, we believe that until the stock not able to take out about 1350, some pressure is likely to be there in the stock prices. Though stock is in oversold trajectory, overall structure for the stock is weak. I think avoid this stock as there is no strength on the stock on the short to medium term perspective also. So I think if you just want to trade for the trading perspective, if you want to buy this stock, then you have to follow very strict stop loss towards 1290. That needs to watch, you keep as a strict stop loss, because still trend is weak, and if it slips below to 1290, then there could be another round of supply pressure we can see, and then stock may fall further towards 1200 also.
Right, that's the view on a clean science. The next query is coming in from Siddharth Jain. He wants to know your thoughts on ONGC and the overall oil and gas pack as well. ONGC over the last 1 month has come under some bit of selling pressure. Could be some fatigue after the kind of up move that we have seen on this particular stock. But within the oil and gas space, which one would you prefer now?
I think most of the oil and gas stocks are consolidating. I think if you want to buy from DC space, GAIL is looking promising. That stock is showing good traction, and the way stock has moved up in last couple of trading session, stock managed to give breakout of its falling trend line. So I think GAIL can exhibit upward momentum towards 214, 215 kind of zone. So I think GAIL is looking promising from that space. Keep your stop loss at around 197. Even ONGC, one can buy and accumulate this stock. Almost now stock managed to recover above 50-day moving average. If at all ONGC manages to cross about 285, then there is a high possibility that again stock may regain its all-time high trajectory also, and then possible rally can extend to 300 kind of zone also. So ONGC one can buy and accumulate with stop loss of 265.
All right, that's the view on an ONGC and overall oil and gas pack. But let's take up the next query then. This one is coming in from Aditya Reddy. He wants to know your thoughts on MTAR Tech. 6-month charts are showing weakness, and even on a YTD basis, the stock has given negative returns, right? It has fallen quite a bit from its 52-week highs as well. What is the strategy one should adopt here?
I think some recovery is taking place, but still structure is weak. We will wait for breakout above 1920 level. That's the important level for the stock. If it's able to take out above 1920, then yes, one can look to buy this stock. As of now, I think stock is approaching to its supply zone. So keep eye on 1920. If it's able to take out, then yes, you can buy this stock. At that time, your stop loss should be at around 1890.
All right, 1890, that's the stop on an MTAR Tech. But we have a query coming in from Debu K. He wants to know your thoughts on a Gravita India. Would you suggest any kind of levels here? How should one approach this stock if they have some holdings?
I think Gravita is showing traction. The stock has consolidated and in recent past, and now breakout is already there on the daily chart. We believe that if the stock holds above 950, this rally can extend to 990 to 1020 level. So I think Gravita he can hold on with stop loss of 940.
All right, that's the view. That answers your query. Couple of more queries that we can quickly squeeze in. Srivardhan and Pooja both have written in on Zomato. Of course, numbers are pretty okay, but we've seen some bit of correction on the charts for a couple of days, right? Do you think this correction is a good buying opportunity?
Yeah, I think yes, one should look to buy this stock in this correction. Keep your stop loss at 150, 180. That's the 50-day moving average. Overall structure is bullish. Some reaction to the result. I think again, if it's manages to cross over 195, then I think there is a high possibility that again the stock may continue its upward momentum, and then again we can see a new all-time high trajectory also for the Zomato. Maybe some consolidation for some couple of trading session. Keep your stop loss at 150, 180 and buy Zomato.
All right, good opportunity to buy into a Zomato. But last query really for the day, Krishna wants to know your thoughts on a Philips Carbon Black. He's holding 500 shares at the rate of 290 per share. Of course, over the last 1 month or so, the stock has been fairly sideways. What would you advise?
I think stock is consolidating since last couple of week in a range. On the lower side, the important support area for the stock is placed at 245, and on the higher side 280, 85 is the supply zone at this moment. I think looking at the structure, we believe that, yes, there is a high possibility that, stock may attempt to give breakout about 280-85 zone. Once this breakout happens, then possible rally can extend to 320 also. So I think he can hold on. Stop loss should be at 245 to hold the position.
All right, that's the view on a PCBL. Of course, this wraps up our query segment for today. And Rajesh, I would like to thank you for taking out time and joining in and sharing your thoughts with us, and also helping our viewers navigate their stock holdings. Well, with that, let's bring on board our next guest for today. Joining me is Mayuresh Joshi, who's the head of equity research at William O'Neill India. Great to have you on the show, Mayuresh, as always. I would first want to ask you about, the engineering and industrial space, right? ABB India and Siemens, both of them have reported spectacular set of numbers. The valuations, when you talk about that, in terms of these stocks, at 70, 80, they are crazy, right? But would you still see some bit of, runway for valuation re-rating, especially after, Siemens business restructuring?
Morning, Nandita. Always a pleasure to be on your show. I think two things. One, I think if you look at this entire pack, ABB, Siemens, Thermax disappointed to a certain extent, but I think the big boys, ABB, Siemens, have delivered a very strong set of numbers. And again, the entire construct that is underpinning the expected growth in the next few quarters is going to be the strong order book that they are sitting on, and more orders expected their way. Again, the margins at which these orders are coming are pretty decent as well. And as they are executing well, that is getting reflected in numbers, both top line, the operating performance, as well as bottom line growth. So I think, will this continue? Yes, because I think the government has massive schemes under its belt. The Gati Yojana, Nal Se Jal, allocation towards roads, railways, infrastructure, which will mean that order inflows at reasonable margins will keep on coming for these players with the capacities that they probably have. And the utilization at these capacities with input costs also relatively stable at this juncture. I think a good earnings momentum might continue for these players. You're absolutely right, Nandita, in terms of valuations. They are way out of the league at this juncture compared to their historical averages itself. Are premium valuations justified? To a certain extent, yes. But as we see it at markets with India, I think the run-up has been a little bit too sharp. They are running at late stage basis as we see it. And though I think earnings might still continue, I think a more prudent strategy would be to wait for declines from a fresh investment perspective. Existing investors can definitely hold on. We are being a little bit selective within this entire construct, Nandita, within capital goods, engineering, infrastructure. What we like at this juncture might be a couple of stocks like a Welspun Corp or a Jindal Saw. Whereas belief is that these same thesis and construct might continue for these players. The order book can substantially increase, and that is a very, very corroborative evidence in terms of earnings also compounding at a very, very decent pace. So we are a little bit choosy out here in terms of our base count, in terms of how the structure and the placement is. But in markets with India, I think Wellcorp and Jindal Saw is something that we like within this space.
Right, of course, valuations are, out of whack here, but, many experts that I speak to say that, if you try to time, your entry into the market, then, you would end up sitting out, right? So, aside of that, let's talk about Airtel. Numbers came out, strength in India business, but Africa business continues to be in a spot of bother, right? If you look at the average revenue per user, it has improved on a quarter-on-quarter basis. Is this the right time to enter into some of these telecom stocks, given the fact that, we are looking at an impending tariff hike later in the year? So, what are your thoughts?
At some point, Nandita, it will happen, and we are going to shell out more. So if you look at how the data packs are priced in India, we are in the bottom 5, which is one of the cheapest countries where the data pricing is probably still continuing. So to that extent, I think as the consumption patterns grow across the length and breadth of country, I think some element of increases in ARPU is a given. So there are no two ways about it, whether it will happen or not. It will happen. It is only the timing on when these ARPU increases will happen. And as that starts taking place, I think the ARPU will show substantial increase, which will lead to significant improvement in the overall cash flows. Again, a significant amount of capex, Nandita, for Bharti, specifically on the 5G ecosystem, has been front-loaded. So to that extent, as ARPU increases start taking place and as they start seeping through the balance sheet and the P&L numbers as well, that will have a positive implied effect in terms of the earnings sensitivity for the stock in the coming few quarters as well. So it's only a question of timing on when this will happen. But as that starts taking place, the overall net debt to EBITDA has already started coming down. So even on a standalone basis, in the passing quarter, it has come down to 3.35 times. It will be substantially lower with ARPU increases taking place and the deleveraging happening on the balance sheet, which will give more legs in terms of the overall earnings growth. So as we see that Markets with India, decent EPSR is rating, institutional holding is very strong as we see it at Cancel. And therefore, I think anybody holding should continue holding Bharti Airtel.
And what about UPL? Commentary has been pretty good. So to say, they've said that they could look at margin normalization later in the fiscal year FY25, right? But do you think high leverage could continue to hurt in the near term?
Possibly. And again, I think the entire story, Nandita, for UPL is how the weather patterns evolve, right? Because it's largely an agrochemical company, and the vagaries of the weather in the previous year, both in the Indian context and the global context because of the El Nino effect, clearly played out in terms of the overall numbers. Now, expectations of La Nina conditions developing is a very, very positive sign for a lot of these agrochemical companies. And I think a lot more traction can be expected if weather conditions remain favorable, as expected in a lot of the weather forecasts that have been put out. As that starts taking place, you will see some element of recovery happening on a very genuine base from Q1 onwards. And that will reflect very, very positively both in terms of volumes as well as pricing across key markets for UPL. Has revenue and cost synergies largely been built in as they were expecting in the last 2 years? Not really. I think it had a hit in terms of what happened in the last fiscal. But I think some element of normalization is expected to take place. So yeah, I think it's trying to build a good base as we see it at MSCI, at Markets with India. Valuations also are not that expensive. I think it's looking pretty attractive at this juncture. And therefore, this is one stock that you should keep on your radar.
All right, valuations when it comes to UPL is looking attractive. But would you say the same for Devyani International? We've seen QSR stocks correcting quite a bit. Numbers came out yesterday. It has reported a loss due to a one-time hit. But revenue, if you look at that, it has reached that 1,000 crore milestone. Of course, it has made a recent acquisition in Thailand, and it has had a few store openings as well. But do you think now the valuations are mouth-watering and it warrants an entry?
Valuations and food both are mouth-watering. So to that extent, I think the kind of numbers that Devyani has put forth, they've done a decent store addition when it comes to its flagship stores. Again, I think the entire discretionary consumption story is going to meaningfully play out. We've not even seen a compounded growth happen so far. But over the next few years, as the purchasing parity probably increases and it becomes at par with the global level, as the disposable income patterns increase across the length and breadth of the country. And if you read through the management commentaries for most of these QSR players, whether it's Devyani, whether it's Westside, a common thread that is appearing is that they are entering into tier 3, tier 4 towns, and the spending pattern, consumption pattern has evolved over the last few years and will significantly improve thereafter as well. So both outside eating, probably in-store dining, will increase at a good pace. They are going through the franchise route, which reduces their capex constraints on the balance sheet. And therefore, I think as a story, I think very, very attractively placed. I think the timing for these stocks is something that one should look at. So maybe I think next few weeks, next few months, maybe post Q1 numbers, you'll get some amount of definite clues in terms of how the entire sector is moving. But yeah, a very, very interesting space structurally over the next few years.
Couple of more questions then. Paytm, its cup of woe seems to be overflowing. It has been excluded from the MSCI India index. Of course, that could lead to an outflow of $70 million or thereabouts, according to Nuvama. Of course, it has seen a drop in market share in terms of bill payments, UPI as well. If somebody is still holding this stock, how should really they go about it? What should they really do now?
I think the stock will go through its own evolvement, as I would say. What really happens with numbers? How is the management going to probably pull themselves out of this one? I think there are too many questions to probably be answered at this juncture. So as I said, I think looking at the market construct, domestic cyclicals, consumer staples, some auto ancillaries probably attractively placed, a few stocks in the broader markets as well. So there are far better stories probably to look at from a risk reward perspective, from a valuation perspective, in terms of the base count as we see it at MSCI as well. So yeah, I think far better stories than to play out. So if anybody's holding, I think you probably have far more attractive earnings accretive stories that can be still played out in the markets.
Defense still be an attractive story after the explosive up move that we've seen, because we've seen some of the brokerages initiating coverage now after such a big up move in these stocks. Would you still say defense is attractive?
As a space, I think structurally yes. Whether entry points warrant entry at this juncture, my own sense is that they have moved a tad bit too much. You probably need to wait for significant declines onto these ones. Whether that will happen, I'm not really sure, because any decline gets bought into very, very quickly. But yeah, very, very interesting space structurally.
Right, last question really, Mayuresh, looking at this earnings season that has gone by, would you say that margins for companies have topped out, and now next quarter onwards, of course next, when they report the first quarter numbers for FY25, do you think the focus will now shift to revenues? They'll have to fire up, their performance in terms of revenue and not margins going forward? What's your assessment?
So selectively, I think it has to be a mix of both, Nandita, because I think if revenues increase exponentially and margins do not, you're still going to see a cramping up happening in terms of the bottom line growth, which gets reflected through our EPS ratings. On the other hand, if revenue probably grows at a decent pace or an okayish pace, and there is margin expansion that happens, the leverage, the operating leverage that one really expects also does not meaningfully play out. And therefore, I think a mix of both in terms of decent top line growth with a decent margin expansion will create the operating leverage that investors are probably looking at. But to answer your question, with the base that a lot of companies have created for FY24, to compound on this base on a consistent basis in FY25 and FY26 will be difficult for most companies, and therefore one must normalize earnings expectations for most sectors, most companies that are operating out of this environment. There will be a few outliers which nobody can predict, but generally I think one must have normalized expectations in terms of earnings delivery on the high base that most sectors are now working out of, specifically for FY25 and FY26.
All right, the big winner this earnings season, according to you, would you say it's the entire banking space?
Decent performance. I think large caps have surprisingly performed very well. So you look at Axis, you look at ICICI, you look at State Bank numbers, have been very, very good. A few of the mid-cap banks, private banks specifically, have also delivered decent set of numbers, and a few of the PSUs as well. There have been misses on a few of the PSU names as well. But again, I think one must understand that deposit growth was a challenge for the industry as a whole. You have seen NIMs compress to a certain extent for both private and the public counterparts as well. And therefore, I think this year will be a year of normalization. As rate cut starts taking place at some point of time this year, I think the normalization in terms of NIM spreads will start coming back to the system as a whole. And therefore, I think large private banks, large public sector banks, in my opinion, have done exceedingly well in this result season.
All right. Well, with that, Mayuresh, I'm afraid we are running out of time, but I appreciate your taking out time this morning and joining us and sharing your thoughts with us. It's always a pleasure chatting with you on our show.
Thank you so much for inviting. Thanks a lot.
Well, that was Mayuresh with his thoughts on various sectors and stocks. But just to remind our viewers, 10 o'clock, we'll see two new listings today, Aadhar Housing as well as TBO Tek. And of course, Virat Kohli and Anushka Sharma backed Go Digit IPO opens today. It's a much awaited IPO, so to say. Issue price is somewhere around 258 to 272 rupees a share, and the size of the IPO is 2,600 crore rupees. And you can bid in lots of 55 shares or thereabouts. So that's one thing to watch out for. Of course, whether you should be subscribing to this particular IPO or not, log on to moneycontrol.com and check out what analysts have to say. But with that that we are completely timed out on this edition of Opening Bell. We are leaving the markets in fine fettle, approaching that 22,300 mark. Broader markets outperforming once again with the Nifty Midcap index almost higher by 1% or thereabouts, and the breadth is also fairly positive. In fact, very strong, tilted in favor of gainers, almost 5:1. That's where the market breadth is at on the NSE. But of course, have a great day of trade and come back and join us at 3:30 p.m. on closing bell. But till then, of course, stay glued to Money Control for all your other news and updates.